Hello guys, welcome back to my channel. Before watching this video, don't forget to like, comment, subscribe and share. Today I want to tell about a news of cryptocurrencies.
How to make your own cryptocurrency, a simple beginner's guide. The emergence of blockchain-backed cryptocurrencies has been one of the most significant technological breakthroughs of recent decades. Notably, cryptocurrency has revolutionized and leveled the playing field for stakeholders across the financial sector, including investors and businesses worldwide. Since Bitcoin's rise to prominence, standing now as the largest of all, many other cryptocurrencies have been developed, with notable assets including Ethereum, Litecoin, and Ripple. In the modern day, there are more than 19,000 cryptocurrencies and dozens of blockchain platforms in existence, spelling out the advancement of cryptocurrency from its humble origins. Perhaps the biggest allure is that anyone can create a cryptocurrency, which is part of why there are so many in circulation today. However, the process requires excellent technical knowledge, money, time, and other resources. So, for those who may have been thinking of creating a cryptocurrency, it seems the stars are aligning. This guide will explain how to create a cryptocurrency and will provide insight into some of the processes that may be encountered while embarking on a similar such project. Without further ado, let's get into it. What are cryptocurrencies? Cryptocurrency, or crypto as it is alternatively called, is essentially any form of currency that exists in a digital or virtual capacity and uses cryptography to secure transactions. Transactions with this form of digital money utilize digital wallets in which such tokens can be stored. These digital currencies are used to represent economic value and can be traded with others in exchange for goods and services. Unlike fiat currencies, most cryptocurrencies, with the exception of CBDCs, operate outside of a central issuer of regulating authority, instead relying on decentralized systems to record transactions and issue new units. Crypto coins and crypto tokens. What's the difference? Cryptocurrencies come into categories: coins and tokens. The difference between them is simple. Coins have a native blockchain built around them, such as in the case of Bitcoin and either on the Ethereum blockchain. Coins have specific utility across the whole network, such as in paying for transaction fees, staking, or enable holders to participate in governance, and can be used anywhere. Creating a crypto coin requires advanced blockchain knowledge and coding skills. Moreover, blockchain development can be extremely costly and takes significant time. Tokens, on the other hand, are built on pre-existing blockchains, Tough tokens often have similar roles to coins. They mainly have utility only within the confines of their own projects. For instance, while most tokens run on Ethereum, PancakeSwap's cake runs on the Binance Smart Chain. Furthermore, tokens can be used for investment purposes, to store value, or in making purchases on a marketplace. Unlike coins, creating a crypto token is comparatively simple due to the availability of pre-existing tools and open source code. For this reason also, token development is generally faster, simpler, and less expensive.
Thank you for watching this video. Don't forget to like, comment, subscribe, and share. See you guys.